Hey everybody, and welcome to the financial blog. In today's discussion, we are going to discuss about use of call options for long-term and fundamental investment. Before we proceed, please consider subscribing to this channel, liking, commenting, and sharing this video. It really helps us out making more of these videos. So let's go to the next slide. Let us say you have approximately $1,000. If you have a different amount, you can always adjust the understanding accordingly. But for this particular discussion, we are assuming you have approximately $1,100 with you for investing. Um, we are also going to assume that, let's say you're already following a particular stock, let us say in this example Apple stock, and you have a strong fundamental belief that in long run, let us say 1 year, the stock of Apple is going to grow multifold. It's going to go up and up. And now you have two ways to invest in this particular belief. uh, Option one and option two. Option one is you can actually buy the stock of Apple itself, which is a basic and fundamental investment. You would put $1,000 in the Apple stock. And option two is to do a long term fundamental investing using the options, which will give you much more leverage. Now, in this video, these are the two options which we are going to compare, and these are the two options which we are going to talk about and see how they vary. If you do not know what is call option investing, I think uh, I'm going to link a couple of videos. On the top right corner of your screen, you will see a couple of pop-ups in gray. So you can click on them to watch a little bit more on the call options trading videos. I will also put a couple of links in the description. So if that helps you, watch them along with this video, and it might help you understand the concept and what we're talking about. So when we're talking about these two options, whether we'll buy stock or we'll buy options, at the time of week one of November 2019, the stock price of Apple is around $255.82. So if you see the two highlighted segments here, that is what we are talking about, right? $255.82 is the stock price. And another key factor which is going to matter in this particular discussion is the dividend yield. So dividend yield for Apple is around 1.2%. That is the return which Apple stock will give you in 1 year on this particular amount as of the first week of November. So this means it is going to give you approximately $1.2. 1.2% of 255 is approximately around $3 in 1 year as a dividend yield. Let's go to the next slide. So yeah, we are going to talk about investing approximately $1,000 into this Apple stock. And another key point to note here is, as currently the Apple stock price in week one is 255. For the sake of our convenience, we will use a price of 250 instead, just for this video's purpose, just to make things easier and simpler to explain and to understand. And as we said, the 1.2% dividend, which is going to give you approximately $3 a year in dividends. Now, using your $1,000 which you have, you will be able to buy approximately four stocks of Apple, assuming no commission being paid. Let's say let's say your the tool which you are using is, let's say, Robinhood or somebody who does not charge commission, right? So that means using $1,000 for $250 each, you will be able to buy four stocks of or four shares of Apple. Now, what happens 1 year later? Now, let us assume, and this is long-term investment we are talking about. So let's assume some market conditions being extremely good, Apple doing extremely well, and at the end of 1 year, the $250 a share changes to $400 a share. The share price has increased multifold. Now, the dividend which you are getting at the beginning, which was 1.2% every year, which would have been approximately $3, let us say at the end of the year, it has changed to 1.5%. That means Apple has increased the dividend, and that also means that now uh, from then on, since the dividend has been increased, you are getting 1.5%, which is approximately $12 a year on the $400 stock price. Let's go ahead. So that means at the end of 1 year, for your four stocks where you had invested your $1,000, you will end up making 400 into 4, which 400 is the stock price and 4 is the quantity of your stocks. You will make approximately $1,600. Additionally, you will also make $10 to $12 in dividend, which was which we saw on the previous slide. And the reason I'm not quoting it exactly 12 and I'm quoting it around 10 to 12 is because you might end up paying some taxes on the dividend which you earned, and also at the beginning of the year you are only getting around $3 a year. At the end of the year you are getting around $12 a year. So what you would have actually earned within the year may not have been at the rate of 1.5% a year, and that is why I'm counting a little bit of less. So you would have got approximately 10 to $12 in that particular year. Now let's go ahead. So that means you approximately made $1,610 in this particular year, which is now your net investment total. And if you remember, you had invested originally $1,000, so you have made $1,600 on $1,000 of your investment, $1,610 on 1000 of your investment, which is around 61% of returns, right? So which is a pretty good return, and this is what you would have earned by investing, by going with option 1, which was the stock mode of investment. Now we are going to talk of the option 2, which is the call option or the option mode of investment. Now if you do not know what is call option, feel free to watch the other videos which will give you a little more insight. This particular video, as we proceed, is going to tell you how it will be different if you invest using the option mode or the call option, and how your returns can be different for the same change in the market. So instead of, in option 1 you had bought four stock of Apple at 250 a share for $1,000. In this option 2, we are going to buy a call option, which is going to be a long term option investment, and we are going to buy one particular call, which is one call size is usually 100 shares, for expiring in January 17, 2021, which is a little more than 1 year, with strike price of 310, and you would have spent approximately $1,050 on it. So again, pretty close to what you are investing in stock. It's just we are still betting on Apple growing within 1 year. It's just we are using a different instrument to invest, assuming the same market conditions. So as we proceed, 1 year later, the change in the market is exactly the same as we saw in the earlier example. So the stock price changes from $250 a share to $400 a share. The dividend changes from 1.2% a year to 1.5% a year. That means the yield which you are getting at that given point in time is, instead of $3 a year, to $12 a year. So this is the overall change in the stock. Let's go ahead. Now 1 year later, as you invested with the option 2 or the method 2, which was call option or the long term option investment, your profit is now different. So market conditions have changed similarly, but instead of investing in stock, you have invested using option, and what you are making now is the difference in the stock price, which is $400 minus, in this case I'm not saying $250, I'm saying minus $310, because the option you bought was with the strike price of $310. So you would make around 90% per share, and one call option is going to be 100 quantity of shares. So that is why you see me multiplying that with 100 over here. So you would approximately your investment size would now be $9,000. What you would not get in this case is you would not get the $10 to $12 of dividend, because you are owning the call option but not the actual stock. That means that means your investment, as you can see here, is increased multifold. Now, before we proceed, I would really remind you to subscribe, like, and comment. It really helps me making and continuing to make these videos, and it really helps me, my family, and my friends to keep posting these videos. Now, next is, so 1 year later, basically your total gain would have been uh, $9,000, which is the current portfolio value or current investment value, minus $1,050 of investment, so which is $7,950 of gain, right? Against $650 of gain, which would have been in the method one. So this investment is approximately 757% more, or 757% um, uh, gain on the original amount which you had invested. And of course, 757% is a lot more than 61%, which you would have earned in the method one. So this is what the leverage option instrument would give you, even for a long-term investment, and it is worth considering. Um, One thing I wanted to quote here and word it aloud as a disclaimer is, I'm not a certified financial advisor, so do your diligence before investing. This is basically for knowledge sharing and fun and entertainment. I do not assume or bear any risk. Now, note that option trading is a risky investment, so and it is possible that you may lose all your money. So, for example, in the example which we took, the stock price had increased from $255, which was the Apple's stock price, but it did not go all the way up to $400. It just went up to, let's say, 270 or $290. You would have lost all your $1,050 of investment, because our strike price in the call which we bought was $310. So you would have likely lost most or all of your investment if you chose the option route. Having said that, if you have fair amount of confidence and if the luck favors you, the gain which you would have done using the option method of investing instead of the regular share method of investing, as you can see on the screen, would have been much higher on your investment. So instead of making around $600 in that 1 year, you would have made approximately 7,000 plus dollars. And that is the real power of option investing. Of course, there is risk, but and you need to be careful of this risk, accepting of this risk, and invest with all your all your due diligence. So note that as a disclaimer. Invest responsibly, invest with care, and do your due diligence before investment. I do not assume any risk based on this particular video. I guess that's it for now. And again, just to remind you before you close, please subscribe, like, share, and comment. It really helps my family, my friends, me to make and continue to make these videos. Thank you guys. Have a wonderful day.